Hi everyone, Chris Jordan here with Stenger Tax. Hot off the press, we have a new tax bill just signed by President Trump on July 4th, the One Big Beautiful Bill, also known as OBBB. I think that was the right number of Bs. This is a wide-ranging bill that covers everything from tax to spending concerns from Congress, and it does have a lot in there. It's over 800-page bill. There's a lot to digest, but some of the highlights we'll jump into right now. A lot of things are made permanent with this tax bill, namely the tax brackets that we currently have that originated from Trump's original bill, that's TCJA back in 2017. So the highest rate stays at 37% instead of jumping up to 39.5% like it was supposed to. A lot of other things like increasing the standard deduction is now permanent, which just means there's no end date on these provisions. They did increase the state tax deduction in the itemized from 10,000 currently up to 40,000 as long as your income's under 500,000 total. They did increase the child tax credit from 2,000 to 2,200. That is also indexed for inflation now, which is a nice win, not just stuck at 2,000 forever. Other things hotly contested and talked about was tax on tips and overtime. They did provide some relief in that area, so people can get deductions for up to 12,500 for tip and overtime income, as long as your total income is under certain thresholds, like 150,000 or 300,000 if you're married. One thing that is not in the bill that was talked about quite a bit was taxing Social Security benefits. There is still a tax on those benefits, but those age 65 and over do get a special deduction of 6,000 per person, as long as, again, their income are under certain limits, about 150,000 on that side. Another thing that they did is increase the estate tax limit for those that do pass away up to $15 million as the lifetime exclusion. So that is now in place. And some things on the business and investment side, they made permanent the qualified business income deduction. Also, it brought back 100% bonus depreciation, which is really great for investment. For qualified property, businesses can deduct that immediately with that 100% instead of the 40% that it was supposed to be this year. They increased Section 179, also another write-off tool for equipment and bigger purchases. And R&D costs are now fully deductible. Before, they were supposed to be amortized over 5 years. Now they are back to being fully deducted, which helps spur some investment in the U.S. here. So there's also some things with writing off up to $10,000 of auto loans that you have, as long as the vehicle is made and put together in the U.S. And also, they do repeal some of the clean energy credits. So those that are looking to add solar panels to their home or buy an electric vehicle need to read that section closely because those are expiring. Probably one of the wildest additions to this tax bill are these new Trump accounts, which we're still trying to get some more information on, but basically comes down to it's similar to a 529 account, college savings, where these accounts can be used for college, but also include first-time home buyer or starting a small business in the future. So there are some benefits in terms of using the funds, but still trying to get some more information on those and really digest the whole bill. So there's a lot in here, a lot of information to digest. Be on the lookout for more to come, but those are the highlights.